Michael Saylor predicts that Bitcoin will reach $21 million per coin by no later than 2046, and he assumes that the annual growth rate of the network will be 21%. And since 2020, his company MicroStrategy has made over 3,300% profit, while the S&P 500 is only at 115%, but Saylor is not alone. The largest banks, which were once skeptical of Bitcoin, are now rushing into the market. Because after the controversial SEC rule SRB 121 is lifted in January 2025, US banks will finally be able to hold crypto. And they can also trade without regulatory hurdles. And experts from Messari or Sygnum Bank expect a global banking rush by the end of 2025. This means that giants like Bank of America and JP Morgan are discussing pilot programs, partnerships, and even Bitcoin trading for their institutions, and even the OCC. Morgan are discussing pilot programs, partnerships, and even Bitcoin trading for their institutions, and even the OCC. An independent agency of the US Treasury Department has clarified that crypto activities are allowed for banks, meaning they are permitted for US banks. And this adoption could make the price explode, could make Bitcoin's price explode. And not only that, others are also predicting a massive increase in the next 2 to 4 years for Bitcoin and other cryptocurrencies. In this fourth cycle, all models will be surpassed, and it will bring the greatest profit, unlike others who expect a flattening.
And they also operate under this fundamental assumption. For instance, a prominent figure in the cryptocurrency space, Michael Saylor, who is widely recognized as the co-founder and executive chairman of MicroStrategy, delivered a highly influential and widely discussed speech in a video presentation. This particular address focused extensively on the strategic and widespread adoption of Bitcoin as a primary treasury reserve asset within corporate structures, specifically detailing MicroStrategy's pioneering and aggressive approach to integrating Bitcoin into its financial strategy and operations. His discourse often delves into the philosophical and economic underpinnings of Bitcoin, advocating for its long-term value and its potential to revolutionize corporate finance and investment strategies, thereby influencing many other companies to consider similar adoption pathways.
He talks about how they initially invested $250 million in Bitcoin, even though no one else was doing it and everyone thought they were crazy. And yet, they kept buying. Bitcoin, $175 million. Then they invested $600 million in Bitcoin, and more and more. And Michael Saylor compares Bitcoin to a stable steel bridge, saying that fears are dispelled by using it. And Michael and MicroStrategy have shown that it's safe by increasing their holdings to billions. And ultimately, according to Michael Saylor, people will end up fearing missing out on the technology more than adopting it.
When we bought Bitcoin, we bought 250 million. No public company had ever bought any before. People thought we were crazy. So then we bought another 175 million. People thought we were crazy. Then we bought 600 million more. People said, you can't stand on it. It'll destroy you. It's like standing on a bridge made of steel. And I concluded it's the perfectly engineered material to solve our problem. But people are living in fear. And how are we going to get them to not be fearful? And I was reminded of Andrew Carnegie's example. It's like building a bridge and standing in the middle of it. You book a plane, you fly the plane, show people that it won't break. That's what MicroStrategy did. We said, if it's good for 100 million, it's good for 1 billion. If it's good for 1 billion, maybe we can go for 4 billion. And at some point, people will realize that they're more afraid of not noticing this technology than of noticing it.
Michael Saylor also explains in another video the game theory behind why nation-states would be more likely to adopt Bitcoin than to attack it. Michael Saylor describes Bitcoin as a digital power with 350 exahash of computing power, worth $20 billion in hardware and $5 to $6 billion annually in energy at 5 cents per kilowatt hour. According to Michael Saylor, that's enough to run the network. And an attack to block Bitcoin or the Bitcoin network for 6 hours would require 3,500 extra hashes, which would be absolutely impossible even with the combined computing power of Google, Amazon, and MicroStrategy. It would require 2,000 times more energy than that of 3 Earths. No government wants to spend decades failing. Therefore, as Michael Saylor says, it is probably permissible for them to support Bitcoin.
They will, if it's 5 cents per kilowatt hour, you're getting $6 billion a year. That's what it takes to run the network, but that's not what it takes to attack it. If I were a nation state and wanted to block every message for the next 6 hours, I would have to win the next 60 blocks. And that means I would have to bring a substantial 3,500 exahash of computing power online, a truly significant amount. The significant problem with that particular approach is even if I were to successfully hijack all the immense computing power of major tech giants like Google, Amazon, and MicroStrategy, I might only be able to bring approximately 5 exahash online. And that's not even the entire story. We
now also have confirmation that the $70 trillion banking industry is secretly going all in on Bitcoin. And that's just totally insane. And before I get to Jamie Dimon and his $1.4 trillion Bitcoin shift, let me remind you quickly about the other giant banks that have now all switched to being optimistic about Bitcoin. Sure, we know that Jamie Dimon is buying Bitcoin through MicroStrategy, but don't forget about the $700 billion giant. German banks have recently started Bitcoin trading. And now there's also the $1.4 trillion bank Standard Chartered, which is also making a small Bitcoin pivot, or rather, a real turnaround right now. Now let's talk about Jamie Dimon and how he might be going all in on Bitcoin. He recently talked about private equity and criticized it, and now he apparently is going all in into cryptocurrencies, and that would be a real 180-degree turn. A real shift. But don't forget one thing. The guy has already invested hundreds of millions of dollars in Bitcoin, or rather, Bitcoin holdings through MicroStrategy. And we need to know that JP Morgan is one of the largest holders of MicroStrategy shares. And when you realize that, it's totally shocking, especially because Jamie Dimon's attitude toward Bitcoin has changed so quickly. He used to call it a decentralized Ponzi scheme. And Jim Cramer openly says that Jamie Dimon was wrong about Bitcoin. Jim Cramer even describes how Jamie Dimon didn't even want to talk about Bitcoin in the past.
He says, I do not know, but I genuinely like to play strictly by the book, But then when he actually does, it is entirely about cryptocurrency, go completely all in on crypto, baby. That is precisely what the true experts do. That would be a truly real
180.
I think that's why you have to check the sites. You have to check the sites, then you catch him. But I see a world of intelligence agencies that are incredibly powerful. He's talking
About Bitcoin. Now he's trying to talk about Bitcoin. Now he's trying to talk about Bitcoin. He had a tenfold run with NVIDIA, Amazon, Netflix, Tesla. He didn't get that wrong.
He got Bitcoin raw. What he did exceptionally well, and what truly stands out, is that he has served as the chief executive officer since the year 2006, demonstrating remarkable longevity and consistent leadership. Furthermore, another significant achievement is that JP Morgan, under his guidance, commands an impressive market capitalization of $800 billion, solidifying his position as a financial powerhouse. What he did right is, okay, so Dave, it has
to be 500 just a couple of months ago. And these are all 3.54 beta stocks. So when you're in a big bull market rally and a lot of your backing is the Bitcoin holdings or Bitcoin infrastructure, this is the bull trade of the century right now. And this is, after having a year or so ago, this is the bull market phase for this type of stuff.
So you like it? We're going up from here? I presume from what you just said, we are.
Yeah. I mean, this thing.
And now Bitcoin is outperforming the 10-year gains of NVIDIA, Amazon, Netflix, and Tesla. That's just insane. And Jamie Dimon might have misjudged that. But what he did get right is he's been CEO since 2006. And JP Morgan has an $800 billion market cap. Stocks pay attention to his predictions. He even mentioned Coinbase. Recently, the Czech National Bank bought over $100 million worth of Coinbase shares. And JP Morgan is an $800 billion institution, one of the largest banks in the world. The global banking sector is worth a total of $182 trillion. And that's huge, especially now that the top banks are investing in Bitcoin. And they're afraid of missing out and now want to get in at any cost. And many of the 50 largest banks in the world are now becoming Bitcoin friendly, which is very, very strange. And that means they are supporting or investing in Bitcoin or Bitcoin derivatives like MicroStrategy or similar stocks. Especially the big US banks like Bank of America, Citibank, Morgan Stanley, Goldman Sachs, Wells Fargo, and JP Morgan Chase are all involved. And the funny fact here is every one of them is pro-Bitcoin. For example, Goldman Sachs holds about $1 billion in a Bitcoin ETF from BlackRock. To be more precise, it's actually over $1.4 billion. That was as of May 2025, and that's really exciting because the entire global banking sector is worth around $180 million. And just imagine, these banks realize that their clients could often hold less valuable assets and instead should buy Bitcoin. What happens if you increase your Bitcoin allocation from just 1% to 10%? And the calculation gets crazier the more we look into it. That means the price of Bitcoin could explode dramatically because so much money would flow into the market. And you just have to think bigger, and that would be a real bull market that we would see then, where banks would blindly invest trillions of dollars without hesitation. And these banks aren't trading Bitcoin short term, but want to hold it long term as the perfect reserve asset, like a safe store of value. Then take JP Morgan as an example. JP Morgan, do you think they're buying MicroStrategy shares to trade them or because of their software to trade it? No, it's about the Bitcoin holdings that MicroStrategy has. And it's not just the US banks. Just take a look at the German banks, a $700 billion bank. It recently confirmed that pension funds and sovereign wealth funds, things like sovereign wealth funds, will be the next to enter the Bitcoin market in a big way. And that's a strong statement from one of the largest banks in Europe. And don't forget about Standard Chartered Bank, a $1.2 trillion bank. It's the first global bank to offer institutional Bitcoin trading. So real spot trading with Bitcoin and Ether for large clients. And this is something entirely new worldwide and shows just how serious things are getting. It's Bitcoin or bust. That's why I believe we're about to witness an insane Bitcoin rally. Get ready for it. The next 6 to 12 months are going to be really volatile, but I think the price is going to skyrocket. And before I tell you where I see the Bitcoin price going, once again, it's great that the big banks are adopting Bitcoin. That's cool and good for adoption. The world's major banks are jumping on board. But don't forget one thing, not your keys, not your coins. So make sure to store your crypto offline. If you want to store your Bitcoin offline, click the link in the description below the video. Personally, I would never trust my Bitcoin to German banks. That's your decision. Banks and especially not JP Morgan after what recently happened. Freddie Mac and Fannie Mae, the two largest mortgage lenders in America, were forced by the Federal Housing Finance Agency. Cryptocurrencies, including Bitcoin, are now being factored into risk assessments for mortgages, and this is happening more and more. So, not your Bitcoin at the current price. I don't believe in diminishing returns for Bitcoin. The biggest banks in the world are currently experiencing FOMO fear, afraid of missing out. This signals that this cycle is about to take off. We're seeing the headlines, Bitcoin is disappearing from the exchanges, and the supply shock isn't slowing down. And that's the big Bitcoin story that nobody's telling you. With banks as buyers, this cycle has more potential than ever before. And think about the big sellers, the big players. And as I've shown you in the last videos, you can already retire with 0.1, retire with Bitcoin this decade, before 2030. That means in less than 5 years. But you have to act now and get active, learn about Bitcoin, learn about crypto, and of course store your Bitcoin and crypto offline. Click the link in the description for that. What's important is that you actually do it and that you store them offline, not with some bank like Deutsche Bank or JP Morgan. Then you're giving them away. Thank you for watching this video and I wish you a wonderful day.